Hey folks, welcome to our getting started, or actually selecting an option strategy. I have a weird thing going on I've got to fix here. So I apologize. Hold on for just a moment. Started, or actually selecting an option strategy. I have a weird thing going on. Oh, I apologize. I'm not sure how that happened, but it happened. All right. Welcome to selecting an option strategy. Glad to see you here. It's been an interesting day in the market, as what we usually see. I have a question for you, and it is this. Have you thought about how you might be able to enhance some of your long positions that maybe you already have? Okay, how do you enhance that kind of a position? That's what we're going to talk a little bit about today in our class. Now, I hope you're following me on X. I'm Connie Hill, CS. I want to welcome Cameron May. He is in the chat to help answer questions that maybe I can't quite get to. And he is Cameron May, CS, and we'll post educational content out in our X account throughout the trading day, things that we notice that we think you might find interesting. We love to have you there. Now, I love John the Noble's greeting here for us today. I have not thought of something so clever to call us like you did. But what did you say? Welcome to the Trading Mavericks and Madams to our class today. All right, so you guys are the Trading Mavericks or Madams. All right, let's go ahead and go through our disclosures, and then we'll go through our agenda here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for information and educational purposes only. It's not to be considered a recommendation. We'll be using the Paper Money software application. It's for educational purposes only. Investing involves risk, including the loss of principal. Spread trading must be done in a margin account. I've got a fixed purposes only. It's not to be considered a recommendation. I apologize. What is going on here? I apologize, guys. This has been really weird on me. Okay, past performance of any security or strategy does not guarantee future results or success. One thing that's different in paper money than in a live account is that you could be assigned early in a live account. That does not mimic in a paper money account, so I want you to be aware of that. All right, today we always want to go out and take a look at our market conditions because that's going to fix our vision on what we might think might be appropriate for the market that we're in. And then we'll talk about what strategies might work. And then I've kind of hinted at something we may be focusing on here today. Always going to look at some examples, and we've got some good things to follow up as far as our portfolio and letting you see what is going on there, make some decisions on a couple of things. So let's get going. We're going to head out to Thinkorswim. And we've got just our good old regular SPX sitting here. And it's just kind of been in a mode of grinding a little bit higher and a little bit higher. And what's interesting about this is maybe last week it was just felt like we were just kind of stuck in a pattern, right? Wasn't really advancing a whole lot. Last couple of days we've had a little bit more advancing and less sideways churning. So we're starting to see the SPX creep up there a little bit again. It's not back to its all-time highs, but man, it's approaching that 61.47. It's getting close, so we'll have to wait and see what happens there. Let's look at the NASDAQ 100. On our NDX, similar type story. It's getting close to those all-time highs again. All right, same thing here, kind of broke out of that sideways trading range, starting to just kind of grind a little bit up. I've got the MACD on our charts today, and we will be using that. And what we're seeing here is the MACD momentum kind of start to shift and move the other direction. It's not really strong at this point. It hasn't crossed over zero. One thing that is interesting here, though, is in this pullback it's just been kind of a lull more than anything in the market. Notice how on the MACD, it didn't go down very deep as compared to maybe where it was down here when it was really pulling back strongly, and down here when it was pulling back strongly. It's only, here it's just kind of saying, we've got a little bit of a pullback, but not a deep retracement of things. Now let's look at the volatility index. Going to sum up our summary charts as we look at the VIX, and are we very volatile in the market? Not really. Fear has subsided. Doesn't mean it can't come back. So there certainly are things that could happen to bring it back, but right now, The market is fairly tranquil down at 16.9. We've been in the 17 and 18, 19 range for about a month. So it's just gradually settling down, settling down. So how are you feeling about your market posture? Probably not a good case for being real bearish. Are you feeling a little bit more neutral, or are you feeling a little bit more bullish? Okay, I'm taking away one of your three choices, bullish, bearish, neutral. Feel free to chat that in here. I apologize for that echo that was going on. Hopefully that's remedied itself here. All right, so option strategies that we might think about. We might think about, I crossed off the bear strategies here, right? So we're not going to necessarily talk about them. I think there might be a bigger case for some bullish strategies, maybe even some quite bullish strategies. Yeah, possibly so. Yeah, so David, Greg, Will, you're all bullish, bullish, bullish. Yeah. Ricebird saying all good. I think that means bullish. Okay, cautiously bullish is Greg. Yeah, very good. So I would say that as well, as we're looking at those major charts, what the trends are doing, the price action, that we're not kind of hovering sideways so much anymore. When we were hovering a little bit more sideways, you know, we may have looked at a little more like something like a short put vertical, maybe, because that would be slightly bullish, but not like super bullish. Maybe easing into it a little bit more, we could be doing a long call vertical where we're still kind of hedging our position. We're selling one strike price. Many times that'll lower our risk areas. We haven't ventured into a synthetic stock for a while. That would be incredibly bullish. Okay. Today, what we're going to be looking at a little bit here is a call diagonal that we leg into. And legging into basically means we're going to be buying our long option. We're going to be selling an option later. Okay, we're not going to do it today, but we're going to talk about when later might be and track some of these long diagonal trades. We haven't had a ton of time to be able to, or opportunity to maybe work in that direction. All right. Somebody thinks, okay, somebody thinks things are going higher. Sri thinks, yeah, thinks maybe the S&P is headed to higher ground. All right. Some of you still could be considering more neutral type strategies. There wouldn't be anything necessarily wrong with that. But I do think there's a good case for maybe looking more strongly at the strategies in that far left-hand column. Now let's head over to our Thinkorswim here. Head on back. We were on the VIX, and let's take a look at something here. We are going to look at some stocks that I'm going to say are moving stronger. They're trending bullishly, and not necessarily at all-time highs, but maybe turning around to the point that people are like, okay, let's see if we can maybe ride a little bit longer trend with this. So here's AMD. Let's look at a one-year chart here, right? So you guys know what have been happening with some of the semiconductors and the semiconductor story. AMD got hit pretty hard here, major pullback, but just this year it was up at 187, right? It's back up to 123, but that's a pretty sizable distance that it still could continue to go if it continues higher. Now, what we're looking at here today is more of what? Kind of a breakout. Last couple of weeks, we've been seeing more breakout type entries in stocks than bounce entries, although certainly we can find both. But you can see today why a case might be made that AMD is breaking out. Maybe yesterday it wasn't as convincing, right? Sometimes we get a little bit past resistance and it's not like it's overwhelming beyond it. But today we get a little bit of continuation. And so some folks might be feeling a little bit more comfortable going long on AMD. All right. Let's see what we might be looking at here. Now, I actually have a few trades like this lined up. And looking further out in time, you know, right now, a lot of times with our verticals, we might be targeting July options, maybe August. and maybe even some of these, early dated July. We're going to come out to November here. All right. November is quite a ways out there. And the idea with buying a long option out in November is that we think this thing may have some wheels. We think it may have a lot to continue to go. And so we're going to trend trade it. We're going to treat it like a trend trade in that if it kind of runs up and pulls up back and runs up and pulls back, as long as that trend is maintained and doesn't reverse on us, then we want to stay in the trade. And when it gets to points where we might see some resistance, maybe a little slowing down, maybe looking like it's going to retrace a little bit, what are we going to do? We are going to sell a call against it. Okay. And this we're calling a legging in approach because we're going to be doing them at different times, right? We have a bullish entry signal here of a breakout. And if you wanted, you could sell a call here as well, but just working a little bit different approach because the idea here would be maybe we can sell multiple calls against the AMD long call. Now we're going to go out to November on this one. We're going to go out to November and we're going to look for something that has at least a 0.6 delta. Do you have to do a 0.6 delta? No, you don't have to. Okay, you don't have to do anything, right? You can choose. But for our purposes, we're trying to buy a little bit of intrinsic value. Yes, that means the option is a little bit more expensive. Now, for some of you, if you're working with a smaller account, this strategy on this particular stock, if the option is too expensive, then this might be a strategy that you don't participate in, or you do something different with it. If you still, for example, wanted to work on verticals of some sort, whether they're short or long, you could do that as well, right? If instead of say paying $1,700 for this option, if you needed to do a vertical in your account, right, that lowers the cost basis quite a bit. With this one, we're selling some nice premium here initially, right? Which is why our net debit comes down so low. But what we're really looking to do, we are looking to buy that expensive option. And then we're hoping as we sell a call, that hopefully we can bring down our net debit, right? Right now it'll be like $17.75. Maybe we sell a call and we bring in $3. A couple weeks later, we buy it back, let it run up, sell another call, bring the cost basis down, maybe $5 or whatever it happens to be. Okay, but that's going to be our strategy with the trades that we're going to look at today. And we haven't really spent a lot of time doing this strategy. Now, if you are interested in the diagonals and getting kind of more bearings in it, I think, let's see here. I was thinking to see if that was one of the things Cameron posted out here, but I don't think it is. But we have a diagonals class. After we get our trade in here, I'm going to take you over and show you where you can see it. Okay, so we're just going to go ahead. We're going to hit confirm and send here. Just going to do one contract. We're going to put it in our options strategies bucket where we track all sorts of strategies. Now, right now, the market's closed, so we're not hearing it fill. I'll watch in the morning and make sure that we get filled on all the orders that we place right now. If we jump over here to this window, when you are a subscriber to our Trader Talks channel on YouTube, makes it so much easier for you to find our content. Okay. What I'm going to do is I'm going to come over here to this new post, and I'm going to say it's new in the last week. Okay. So some of you that have seen this, you're like, it's not new. It was there last week. And you're right. We did get it out there last week. But you can see what our regular schedule is and who typically is assigned to teach a class. I'm going to blow that up a little bit. See if we can't get all of it on there. Oops, I did it a little bit too much. And then down here, you see who it is, right? Who the instructor typically is. Now, the diagonals and long verticals, I'm thinking, Cameron, that you you teach this class, or at least you used to, but it's going to be right here, 11 a.m. on Thursday. There's Cameron's picture. And he typically teaches that long verticals and diagonals class. They're similar strategies, okay? But there are some nuances to trading each of them. And so Cameron goes into more detail about that. So just wanted to let you know where you could find some of that information. Then, of course, it's easy to find some of our new short videos. Got some shorts that were coming out. What are short videos? Well, they just don't last very long. And we're teaching you little concepts in a little snippet. Okay, so if you haven't been a subscriber yet, you might want to check that out. And let me kind of get this back to a little bit better size as we use our screen. All right, let's head back to Thinkorswim. Going to head to our charts. And let's do another one here. I'm looking at EXAS, Exact Sciences. Let's go back. Let's look at this is the full year we're looking at here. It's kind of been up and down at different times, hasn't it? Kind of peaked out here. Its peak was in November, had a long pullback. And then what's happened more recently? Well, it's just starting to make higher highs and higher lows. And I should tell you this, the 10-day is the blue line, the 30-day is the red line. And so we're sometimes with these trades, we're looking kind of at that intermediate trend as long as what's going on short term. So we've got a running up, a little pulling back, and a nice little bounce here today, nicely off that 30-day moving average. That MACD is rolling up. It's letting us know momentum is starting to shift in more of a bullish direction. So some people might say, yeah, okay, I like that as a bounce entry. Now, do you have to do it? Absolutely not. But for our class, for our purposes here today, we're going to use that as our entry signal. Thank you for pasting in your playlist there, Cameron, so people could go find when you've been going in depth on diagonals, learn a little bit more about it. All right, Exact Sciences. Guess what? We're going to do the same thing. We're going to take a long approach. Let's come over here to the trade tab. Let's see what we might have available here. Now, this one has some October options. It doesn't have November like AMD did. So in that case, I don't necessarily want to go out to January, although somebody could. Okay, then you're thinking maybe even a 6-month type trade. I'm going to go with October. My plan initially was to go with either October or November, depending on what was available with the stock. All right, so trade's a pretty decent volume, traded 3.7 million shares today. That means we're likely to find some decent open interest in the contracts. Again, we're just going to do one contract, and we're going to look for a 60-something delta, okay? By doing so, we're trying to create a scenario where we're looking to have some intrinsic value, at least to start with. Now, this is a $56 stock, so not nearly as expensive as AMD, about half the price, and so the option prices are going to be significantly lower here as well. So it looks like our first 60-something delta is this 55 strike price. Now, right now, that spread is looking horrible. And when I was looking at it earlier today, it was a little wide, but not tremendously wide. It was more like 30 cents wide. So it would be more like something like, say, 610 by 640. Okay, that one just jumped here a little bit. This here would be like 730 by 760 is what it was pricing at a little bit earlier. Okay, so I don't think that's when the markets close, sometimes those bid and ask prices kind of spread out a little bit, get a little bit artificially wide. I would say something like what we're seeing here on the 57.50, where it was a 40-cent spread, is much more realistic than this 530 by 760. Okay, so what we're going to do, we're going to buy this, but we're going to put it in at a lower price. I'm going to put it in at 730. Okay, because that's a reasonable price for it during the day, assuming it starts trading in that range. And again, I'll have to look in the morning, make sure that we get filled on it. And so what I tell you, 730. Oh, I take that back. I take that back. Let's go here with something more midpoint. Now No, I take it back. Okay, let's put it in for like 7:30. And if we don't get filled, I'll have to come out tomorrow. I'll look at it. Maybe I have to increase it a little bit. But we don't, I'm going to say we want to get it a little bit narrow, a little bit down. We'll see where it opens in the morning. All right. So just knowing, because I was looking before the market closed, what that price was, it was trading a little bit closer to that. All right. We're going to put it in as a day order. We're just going to do the one contract. And for the moment, we're not going to put in a hard fixed exit. However, we should know when we want to exit. Let's go back to the chart here and talk about what might be some considerations. Now, when we're buying a further dated option, like these two trades are, the time decay is significantly less. If we went out and pulled up, compared theta for some of these June and July options compared to out in October, that theta decay is going to be quite a bit smaller. Okay, so if the stock goes against the direction that we're looking at, we might not feel it quite as harshly as we would with something shorter dated, or as we would with something maybe even at the money or out of the money. By going a little bit in the money, that gives us a little bit of cushion there as well, because there's a little bit of intrinsic value and not quite as much time value. Okay, so looking at this, where would be some really significant support that if this stock went under, we might be concerned about it? I would say we could probably draw some diagonal support there. I don't know how strong that really looks. We could draw some horizontal. Let's use the horizontal price level here. Maybe something more in this range. Come on, there we go. Maybe seeing where the support has been more recently after that gap up. Now, lots of times when we see a gap up, the bottom of the gap acts as support. What's interesting on this is this gapped up, came back a little bit lower here, but where it closed, that seems to be acting as support. Hit it here once, hit it here twice, hit it here a third time. Okay, so that probably is a little bit stronger level of support, that if this thing started trending down, really broke below there, then we might go, this trade is not working out how we expected it to. We probably need to get out. Right now, we're going to keep a mental stop on that. And know that, if it goes much below that 52, 51-ish area, that we may need to consider getting out of the trade. And I imagine by that point, we don't know for sure, but we would be getting in a range on this option that we might be down 50% on it. If we're down 50% on it, usually that's where a lot of traders will draw the line. Okay. Now, the other thing that could happen here is, what if it just kind of stalls out? What if the market gets kind of in a trading sideways pattern again? If that is the case, we may consider selling a call against it sooner. Okay. The idea here would be maybe it runs up to resistance. If it doesn't make it over and it uses it as resistance and rolls over again, then this is our timing that we want to sell that call. But if it happens a little bit earlier, starts going sideways and week earlier, great, we'll go ahead, we'll do it earlier. Okay, so we're going to really pay attention to those technicals. Now, we may be noticing a little bit with the MACD. What if the MACD just kind of starts going sideways, okay, and not continuing to roll up? That might be another signal. Okay, that swing that we were seeing in the momentum is starting to die out. All right, as you have questions, go ahead, chat them in. I'll catch your question, or Cameron will catch your question. And as I look over the chat, I see we've got a survey here. Now, you guys know from time to time, we will put out surveys in our classes, right? They're easy, and I can deal with easy surveys. Maybe you can deal with easy surveys too, right? 2 questions, fill in the radio button, 1 to 10, plop, plop, you're done. 2 seconds, okay? We do have 2 additional questions if you want to answer those particular questions. We'll look at them and use them. If there's some things you'd like to see in some webcasts, you bet, you let me know. You can use that as a space to communicate information to me as well, okay, with that. So we always appreciate it when you fill that out for us. If you write something, even if it's just filling in the radio button, I promise I will read it. And our managers do as well. Scott's very interested in that. All right. That is what we're going to do on AMD and AXAS. Okay. Let's take a look at another one. One other thing that we could do if we wanted to, if we didn't want to put in a hard stop, is we might, at a point where we might see a significantly lower low, we might put in an alert. Okay, so I'm going to put in an alert here about right where my mouse was. If it gets at or below, say 52.85, let us know about it. We'll come out, we'll look at the chart, see if there's some bad news, if there's something, maybe it causes the stock to gap down. Then at that point, maybe even earlier than it actually breaking that support level, if it looks like it's met, a technical, I don't want to say violation, but a technical breakdown, yeah, we might get out sooner. All right, so we're going to go ahead and set that. And let's also determine on AMD, we're going to go back here a little bit, where would it make sense to get out of this? Now we're seeing a breakout today. This breakout was old resistance. It should be new support. Okay, it hasn't had an opportunity to really test it, but what we might expect from this is the stock to go up a little bit, maybe come back and retest, maybe even go down a little bit, because remember, these are areas, it's not just right to the penny. And so, it might be something where, okay, if we see it make a lower low. Well, right now, maybe the most recent low, we could go with this red candle here. That low is around 114.71. Okay, so mentally, we might say, okay, if it gets lower than that, let us know. Obviously, this one down here is a significant kind of trough, and this is kind of more of a very short-term trough. So let's go ahead. Let's put in an alert here as well to let us know if it gets at or below that level. Okay, as we get further into the trade, we're going to I'm going to say adjust or bring up a hard stop. We don't have one on right now, but we'll go ahead and put one in. For example, if this stock runs up, pulls back here and bounces, then we'll go, okay, good. It's going to use that as our support level. Let's go 3% below that, right? We'll go in and set that up. We do not do ETFs in this class. In fact, in many of our classes, I have a request here to look at an ETF. And so in most of our classes, we don't talk about ETFs, although you certainly could use them for this strategy. But I teach a class on Mondays at 2 Eastern where we talk about ETFs. And then on Friday morning at 9:30 Eastern, right at the opening bell, our Friday Trader Talk session is dedicated to ETFs as well. Okay, so sorry, can't go down that path with you right now, but in those two classes, we certainly can discuss them. All right, new one I want us to look at, Qualcomm. So Qualcomm kind of struggled this year, okay? Definitely has struggled this year, but what is it doing now? It looks like it's recovered off its lows. Is it making lower lows or higher highs and higher lows? It absolutely is. What's it doing here today? We're seeing another breakout, okay? And I should have picked out where that high point was, 230. So it's half that right now. Well, a little bit over that, right? It's 155 is where that resistance was, but it still has quite a ways to go. In fact, it may not find some significant resistance till it gets up there at about that 176, 178 level, okay? So we could have some room to move before it does it. Now, if we get growth in the price of the option up near to that resistance, that would be awesome. I don't know if that's going to happen or not. That would be nice, but we'll be watching if it does that. Maybe it meanders up. When it gets up to that point, then we can go ahead, sell a call against the long option we're going to buy right now. Okay, so nice breakout entry. We're still using our rules of a typical bullish entry, right? A support bounce, a hold, a moving average bounce, a breakout of a price pattern or resistance. Okay, on this one, Qualcomm, we've got an October. We also have November available on this. So we're going to use the November option on Qualcomm. Go out a little bit more. And our first 60 something delta looks like it's right here. That's going to be our 155 strike price. Now, let's talk about this for a moment. Right now, there is not a ton of open interest here, right? There's 14 contracts. That could be something that some people might be concerned with. Now, today, Qualcomm traded over 9 million in volume on the stock. And let's come out here and just say, like, what the July options are like right now that are 32 days out, right? We have thousands of open interest contracts. And so let's look at August here. Looks like as it gets closer to options expiration date, that definitely the open interest is there. Let's just look at October. November didn't have quite as good of numbers. Do you know, I'm going to change my mind. We're going to go with October here. And the differentiator is the open interest on the contracts. Okay, so scratch that. We're not going to do November. We are going to make a choice here to go with October because of that. We're still going to do the 160 or the 155 strike price. And it is at a 60 delta. So here's our 155. It is a little bit more expensive. It is a more expensive stock. And let's see what that spread is looking like right now. It's not too bad, 50 cents, or not even, I guess it is 15 cents. That's pretty tight, okay? When we're looking at, 15 cents divided by $16, well, that's really low. That's like a 1 or 2% spread. We love to see them that tight. Okay, so no concerns in that area. Let's go ahead. We're going to buy it. 1605 is the price it's putting in at. We'll just go ahead. And again, we're going to put this in our option strategies bucket. Where we consider getting out. Well, same thing here. This is short-term resistance, so we're going to expect it to be support. Hasn't run up and tested it yet, although it could. Not all stocks that break out are going to retest. A decent percentage of them do, but some of them don't, right? And they continue to move up, and it's had some nice volume here in the last couple of days. Yesterday was above average volume, getting up to resistance. So again, we're going to look to see if it will act as support, and if so, then we're going to put on a stop loss on the long option that we're getting right now. All right, we went ahead, we put that into our bucket. Now I've got one more trade that we may circle back to. I want to do some reviews of our existing trades because we have some interesting things to talk about with what's going on there. So let's shift gears for a moment. All right, let's go ahead here. Let's go to our monitor tab. Let me just kind of clean up some things here. Here are the trades we have going in our class. And we've got a couple of them that put us out today. Okay, meaning they exited the trade. What trades were those? First one here was MCHP, Microchip. And we just got into it last week here. Let me show you the chart. I don't know if I've marked it all up here completely. Microchip. Right? Similar story, what we're seeing with a lot of the semiconductors and microchip stocks, right? It came down. It had kind of a nice little move, bouncing off the 10-period moving average, and it's already started the pattern of higher highs and higher lows. So we got in here just last week. We did a short put vertical, 57, 50, 60. And here's our 60 price right there. I put that blue line there so we know, okay, where do we want it to stay above? Sure enough, it has had a couple of days of not doing a lot, but it's moved up here really nicely that in 5 days, we hit our target of taking in a chunk of that credit. So if we come look at the numbers here on MCHP and we bring up our trade history, ignore this one, that's not the trade we're working with. We got a 71-cent credit. We went and bought it back for 21 cents. We were in the trade for a week, all right, because it went out today. So net on that is 50 cents. And if you're thinking, well, what kind of a return was that? let's go to our calculator here. Our net on that was 50 cents. And our max theoretical loss at that time, I went through and worked out those numbers. The max theoretical loss was $1.79 because it was a $2.50 wide spread. We got filled here at 71. Okay, so 50 cents. I don't know if I stuck that divided by n yet. I don't think I did. Divided by 1.79. Well, come on here. 1.79. Yeah, worked out to about 28% return. Okay, so for a 5-day trade or 7-day trade, was it worth it? Yeah, some people might like that, get a percent per day that you're in the trade. Well, we're in the trade 7 days, and that's quite a bit more than just a 7%, okay? Almost 28%. Let's look at another one that hit a target here today. We're going to go to same thing with Micron. Haven't been in the trade that long. We got in on the 4th. Our class was on the 3rd, so our trade went in on the 4th. Now, in this one, we did a long call vertical. And somebody asked the question last week as we were kind of wrapping up, and so I didn't have an opportunity to ask or answer. And the question was, well, when would you choose a long put vertical over a short put vertical? When would you decide that? And just kind of in a nutshell, if you think maybe there's a little bit more upside, you might do the long vertical. If you're not sure of that, of course, we don't ever know what the stock's really truly going to do. But if you're maybe want to not be quite as bullish on it, then you might go for the credit spread instead of the debit spread. Okay, so here, long call vertical. Look what we got out. We got out in 5 days, and we took that chunk. We locked in that chunk of the gain, which was, in this case, what does that look like? About, I think it was $1.90 here that it ended up. Yeah, $1.90. So let's divide our 190 by our 235 because that was our max theoretical loss. So 190 divided by 2.35 gave us about an 80% return again in a week. Now, results are always going to vary. We're having some cooperation with the stocks right now. Sometimes that happens, sometimes it doesn't, but I think if you're aligned with the direction the market's going, you're not violating the trend of the stock, then you kind of, put some things in favor for the trade to help work out. Now, in this case, same thing, ran up, got out today. It's interesting, it's right here at a resistance level. So it'll be interesting to see, does it bust through and create a breakout? Maybe if we see some higher volume there, it might be convincing, or does it just run to this area and roll over? Okay, we're going to be watching that to see. Now, one trade that we're still in that I want to show you here is ARM Holdings. And ARM Holdings, let's just come back here. On it, we have a vertical going on as well. Oops, that was the wrong ticker. Let's get the right ticker and collapse this. Okay, so we've got a call spread, a long call spread here. We paid $2 for it, or $1.95, and right now it's worth a little over $3. Okay, so we're up decent on the trade, $450. But you're going to notice here there is not an exit order. So we need to put one in. The original exit order, we had said it was based on technicals. Okay, we had seen this flag. We saw it breaking out of the flag. This was 2 weeks ago. And so our first target on it, or that we had in there, said if we get to 143, which is basically near the end of this flagpole, that we would take profits, would be happy to get out there. Or if it went against us and dropped down into the kind of the consolidation of the flag area, we would get out there. And that was going to be at 125. Well, things have changed. We're up significantly on that. Probably don't want the same X's that we had put in initially. So what makes sense at this point? What we're going to do for our trade, I'm going to suggest, sure, we can go back and put in that 143 as a target, but we're not going to put in 125. We're going to want to capitalize on the gains that it has so far. So one thing we could do is we could say, okay, what was today's low? If the stock goes lower than today's low, where it is right now, it might be running out of steam, but the MACD is rolling up. The momentum is still going that way. We have a growing bar here on the MACD, letting us know the momentum is still moving positively, right? And fairly strong because it's across the zero, and this is a little bit bigger than the move, say, the momentum that was measured yesterday. So here today, our low is 135.87. Okay, so we're going to put our stop loss at 135. Let's go 67. We'll give it 20 cents below today's low. And you can use any number you want. You don't have to use 20 cents. You can pick a different day that you use, okay? But this is at a point where, like, let's ratchet. Let's try to lock in some gains if we can. Okay, so that's what we're going to do on this guy. So let's go to our monitor. We're going to create a closing order. And it's going to be a market order depending on the conditions that we have here. And let's roll those in. Bring the whole thing over here so you guys can see it. So we're going to say if the stock gets greater than or equal to 40, is a little bit short of that flag target. And let me make sure I've got that going the right way. We want it to be greater than, so let's switch our arrow here. Or if the price of the stock gets lower than 135.67, then we want to get out. Now, we're not guaranteed that we're going to be making a gain if it hits one of those two. But we're kind of putting in a bracket that we're going to kind of cinch it up as we go and see if we can't try to lock in some profits. Hopefully that gives you an idea when you're managing the trades, some of the different things that you can be thinking through to actively manage your stops and your exits, instead of just kind of leaving them alone like they were when we first got in the trade. Okay, so again, we don't know the price of the options at that point, so we're just going to put it as a market order, and we're going to send that off. Hopefully by this time next week, that will have closed out. And the other thing here is that we have just 10 days to options expiration. Okay, generally we want to be out, well, traders like to be out before options expiration, right? So they might start winding down 5 to 10 days. Some traders like that range, that they might try to get out sometime in that window so that they don't get put in a bad position because of the option. And sometimes we may end up rolling a position. Probably not necessarily here with ARM Holdings, but we're in a shorter window there where we need to wrap up the trade. All right. Well, as we wrap things up here, just quickly to summarize, we put in 3 new trades. We put in AMD, EXAS, and Qualcomm as long options, longer dated November and October timeframes. And we're going to plan to sell calls against them when they hit a resistance level, when they show weakness and are looking like, hey, they're ready for a breather, ready to pull back a little bit. But we're going to have to be really active with that, just like you are with a covered call, right? That you're really trying to make sure you time it as best as you can, hopefully at a peak. We don't know if it'll be the absolute peak, but we're going to look for signs that it could be. All right. Thank you so much for your attention here today. Thank you, Cameron, for helping out in our chat and reposting those survey. And again, if you fill out the survey, we always appreciate you taking the time to do that. So today we've got fill out the survey, please. If you haven't become a subscriber, become a subscriber. It makes it real easy to find our content, so much easier, okay? And if this was helpful to you today, go ahead and hit the like button. That allows it to kind of move up in the algorithm so that other people looking for similar content are able to find it, okay? All right, this is the last webcast of the day. We'll be back bright and early tomorrow morning. Trader Talks right at the opening bell. Thank you so much, everyone. We'll follow up on these new trades next week. Bye-bye.